Good morning, everyone. How are you feeling this morning? Please, a little song from me to you. We can pause it. Thank you. The song I've just played you is by Sipho Hot Sticks Mabuse and a gentleman known as Ndate Tabang. Ndate Tabang plays a traditional Sotho instrument called the lesiba. Hot Sticks is playing the saxophone, though he's originally a drummer. And the DDG said to collaborate, so I thought I would share a bit of a collaboration with you between those two artists. Because I think what we have in that song is a powerful metaphor for certainly why I work in the sector, which is the inclusion of the elements of old and which are enduring, and the infusion of the global, that being the saxophone, and of course, some creativity and intentionality on the of both artists. So if I give you nothing else today, I hope I will have introduced you to a new song to which you may jam if you're a jazz person, or just relax as you reflect about whether we are using technology for good in society. And to address my own existential issues about which I've been trying to do for quite some time now, about why I work and why I'm in the sector, it is to find that sweet spot where we not only make money, but we do good in society. So I chose my topic on the basis of the fact that what has happened here is a good convergence of financial services, and I didn't choose it just because I'm comfortable with financial services, and the world of technology, and specifically telecoms. One of the things that's in the prospectus for today's conference talks about a connected global economy. And the question is, who gets to connect and who doesn't? And I think what we have in fintech, enabled by the telecom sector, is something that has opened up possibilities for people who had hitherto been excluded and who are still substantially excluded in some respects. And talking specifically now about people in our rural communities. If you look at the stats that the DDG put up about 3, 4, and 5G, for Lesotho just removed the 5G and put 2G because we still have a significant level of coverage that's enabled by 2G, and it is primarily to do with those rural communities. For your information, that connectivity is delivered by way of the USF program, which is the Universal Service Fund, which is funded by a combination of ourselves as mobile network operators, the government of Lesotho, and from time to time we get additional donor funding, which allows us to reach the farthest corners of the country where people would have no connectivity and they would certainly have no access to financial services, as 83% of Lesotho's financial inclusion comes by way of Vodacom's M-Pesa offering. So I thought I'd paint that little backdrop for you before I get into the presentation. Because as we look around the world today, you see the situation with the Russian attacks on Ukraine, the situation of the Israeli attacks on Palestine. It begs the question, is the world becoming a better place? And what role, if any, do we have as practitioners in our space? So if you're having those challenges, this is one of those spaces where I think something good is happening enabled by ourselves, and it also addresses some of the issues that my counterpart from MTN was talking about in terms of plugging people meaningfully into a wider world than certainly the environments that our rural communities tend to exist in. Do I go next? Oh, there we go. And as I've already said, this technology has not only transformed the lives of Basotho, but it's done so irreversibly and positively so. Why is it important to talk about the positive? Because in some households, you probably need an app to connect the parents and the kids because everybody's maximizing their screen time. And for all the connectivity in the world, people are substantially disconnected. In this instance, that connectivity has done good. You'll be aware that as humans, we have a fundamental need to connect. And the key thing then is, do we move people forward through those connections, or do we move them backwards to explore the worst of themselves? At Vodacom, we commit ourselves to connecting for a better future, and I think we've substantially achieved that through the fintech offerings that we deliver, not only in Lesotho, but many other countries continentally where Vodacom operates. DDG, you would do well, I think, to challenge all of us in the sector in South Africa to work more closely and collaborate with the banks to see how we mop up those pockets of exclusion that still exist. And this is despite South Africa having an excellent financial services sector, not so much to do with the likes of myself having tried to ruin it, but for the fact that historically South Africa has had all the key aspects to enable that to be the case. But the job is still not complete. There is much to learn from certainly the likes of Lesotho in terms of how to move that forward. Now, the industry in Lesotho, for those of you who are less familiar with that small country that is entirely surrounded by South Africa, is that we have 2 mobile network operators, ourselves and Econet, 4 key mobile money players in the market, and we have more than 1 billion deposits within the industry with transaction volumes of more than 2 billion. Now, all of this dwarfs what happens in the banking system where there's about 4 major players. Why? They haven't solved for that fundamental element of how do we get into the, because Lesotho is a very mountainous country, the highest point at about 3,500 meters above sea level at Tabanantlengan. The terrain is unfriendly, to put it mildly, and the population size in those villages tends to be quite small, so you're not going to run a financial services business of any significance because the cost structures are just going to tear it apart. And that's where we came in as mobile providers, and I've already spoken to the fact that 83% of that market share sits with M-Pesa. And we have more than 1.3 million customers using this, in contrast with a couple of 100,000 who are using the banks. And that's the significance of having this industry. And the cost to serve is substantially lower, because one of the tensions that we need to manage on the continent is how we facilitate access, but also manage the cost to serve issues. I'll touch upon some of those on the tail end as it relates to the mobile network infrastructure, which we need to facilitate the inclusion. There was mention made of the fact that we need to collaborate, and there's a thing which by now I think we're all familiar with of co-opetition, where we compete with the banks on the low end of the pyramid, but we also cooperate because there's some lending which we facilitate where they have access to our customers, whereas the cost of acquisition of those customers in the financial services model would exceed a ticket size for a loan that you would advance. So we're doing all of those trade-offs to say that you provide some of the lending, we'll provide the market access, and through the savings, we're able to give the customer a proposition that he or she And if you're an entrepreneur, good luck getting any finance out of them. DDG, take that back into the government space in terms of how you facilitate there being meaningful access to finance, to build the businesses that can hire people so they can buy our products as a sector and catalyze this connected global economy that we all talk about. And the question is there room for all? And the answer is absolutely. The banks have tried moving into the space. What I'm hopeful is going to happen is that we're going to see more cooperation than competition, so that ultimately we don't duplicate and end up trying to make cost recoveries against customers who are already substantially economically stressed. Now, we've also played an important part in terms of the formalization of group savings, and we've dealt with something very basic, which is you'd get to, for those of you who are familiar with these structures, you get to either Easter or the end of the year, and what happens? Either rats ate the money, or any number of excuses because the treasurer or whomever has been entrusted with sitting with the society's money experiences financial difficulties, and what do? They help themselves to the money. So we're dealing with that. We now have more than 15,000 groups saving more than 1 billion, which means there's less money at risk of disappearing, and it's also liquidity that can now be injected into the capital markets to facilitate businesses and other things happening which would otherwise have been passive and sitting under mattresses or in trunks. We work with international development NGOs to facilitate grant and a whole host of other payments, be to the elderly or indigent, which has been a huge, huge impact, because in some of those communities which we now reach with this offering, it would have taken an average of a week or two in some instances to get support there. And what started to happen is that those areas are now becoming economically activated, because you can have shops and other things, rather than all goods and services being shuttled into those areas. They can actually be located in those communities themselves. And there's also huge potential for asset gathering to present micro wealth offerings into those communities, because all of us need to save and all of us need to invest. But as we sit here being the overbanked, and you have all the investment options that are available to you, there are communities where if somebody wants to save, there's no offering available, and so there's a lot of work to be done in this area, and we have to deepen the convergence to go beyond access to basic financial service to also now get into the wealth creation space. Perhaps I've been a bit aggressive in my statement there, but I think the sector has been as revolutionary as when cell phones were introduced. A number of you will remember the famous Molo Mhlabwame Telkom ad. Why did we all love that advert? For those of you who are too young to remember, look it up. We remembered it because it spoke the truth about why we needed to connect people, and it also explored a basic thing of that very human of things, and it did so very humorously. So for those of you who are ad boffins, please look up the Telkom Molo Mhlabwame ad. Of course, there's a million ones you can look at from Vodacom, so I won't even mention it. So how is digital inclusion possible? There's a coverage layer. Mention has been made already in terms of whether it's 3, 4, or 5G. We use 5G by exception because the economics are just plain ruinous. And so DDG, between yourself and your counterparts in the AU and other structures, do something to ensure that you can provide the necessary subsidization for us to bring the 5s and other technologies. The Japanese are already playing with 6G, but we need you. We need you to go beyond receiving our taxes and doing the redistribution to saying, how do you become catalysts and give us either the incentives or soft funding or any combination of things, grant funding, in order to continue that. As Africa, we shouldn't miss the next G, because it matters beyond just the connectivity. It matters to whether we're able to continue to drive inclusion of all sorts, and so that we're not only resigned to being content consumers of stuff that comes from elsewhere. Let's build the connectivity, build those industries, and ensure that we're also able to not just download, but to upload our experiences into the wider universe. The device layer. This is especially problematic because in an ideal world, we need somebody to have a 4G device to have the full experience that we'd like them to have with not just our wider offerings, financial services, you name it, because until there's no apps, we still need the apps to be able to sit on those. And it also facilitates there being access to things beyond just the OTT things, which are absolutely ruining our business models. DDG, I'm glad you're here because this is another one for you and your counterparts. Africa needs you to be more resolute in terms of how you regulate. There are those of us who have to take our shareholder funds, take a lot of risk, invest. There are others who don't have to, they just ride over our networks. It's not a sustainable thing. The day will come, or could come, where there's no connectivity on the continent because none of us want to invest, because others are allowed to piggyback and they don't have to pay taxes, they don't have to build networks, and they get to be the heroes because it's the baddies in the telco sectors who want to charge people to connect. Are you with me, Ntate Masholo? Okay, please be my messenger. Oh, sorry, lati tuma mina. Tuma wen. Location-based offers. In order to run successful business models, whether it's in the fintech or telco side, we've had to disaggregate our customers and put them into a segment of one, where day to day, we have 97% of our customers being on prepaid. Day to day, using machine learning, big data, and all of that good stuff that we talk about, we're using it positively to put this customer in a segment of one, and we price them almost individually. At some point in the year, a customer gets propositions that are built uniquely for them. What's the challenge? To build these propositions, you have to study your demand patterns, regionalize, day, time, day, hour, all of those good things. On the other end, we have regulators who want you to submit things in order to do pricing, and then it's like, leave us alone to price. Put us at a point where we don't have to ask you for permission to do right by the customer. Otherwise, we can't honor that thing, at least in the Vodacom side, which says CSG, customer, simplicity, and growth. If I have to file a tariff, wait 10 to 14 days before I can give a customer a better deal, it doesn't help me sitting with unsold inventory. It doesn't help me in terms of pricing the customer better. Credit services. We're doing a lot here to facilitate access to devices, because as the cost of devices rises, people are no longer able to save month to month in order to be able to buy the devices. We have to give them credit solutions that allow them to buy the device and pay by day, by week, or by month, dependent on whatever they're most comfortable doing. All of this requires network coverage, which brings me to a challenge which I'll come to shortly. The digital inclusion pillars, 4G coverage, we have about coverage of 94% of our population, which is pretty impressive given how expensive it is to build networks in a place like Lesotho. We're doing a lot of sharing with our competitor, so DDG, I'm not just asking you, I'm also doing the things that you say we should do, because overbuild isn't something that's sustainable for any of us. The recovery models are already stressed. We're doing a lot of work on increasing smartphone penetration to the point where we'll be manufacturing some devices in Kenya, which is aimed at bringing the input costs down. I would be happier if it's not just a building exercise, but where the chips and other things were being made on the continent. But for that to happen, we require cross-border collaboration, and for Africa as a totality to take a strategic stance on whether it continue to sustain itself on being a consumer or whether it wants to graduate to being a manufacturer. I say this mindful that China wasn't always where it is today. I challenge you today to look in your bag, in your home or anywhere, and to not find something that's Chinese made and made to the highest standard globally even, and ahead of even our Europeans who have long held that esteem. We subsidize lower end devices in order to ensure that people in the communities who would otherwise not be able to have a smartphone have the ability to be connected, and therefore to experience more than what the world has to offer them in their immediate village. This is another area where we need governments. If it is our collective responsibility to facilitate digital inclusion, governments and regulators have a part to play in terms of injecting themselves to provide the funding. I've already given the example of the USF model in Lesotho. It is necessary here too, so that people in the corners of Limpopo, Free State, Eastern Cape, take your pick in terms of where our most rural communities are. We need government to become a lot more active there, as well as a partner. I've spoken to the hyper-personalized pricing in order to drive affordability and demand. It's something that we do now on a standing basis, facilitated by us having big data tools to be able to use. The key question, I think, which we haven't addressed sufficiently as a sector is, on the one hand, we want inclusion. On the other, there's a very real danger with the concentrations of wealth in societies across the world that there's going to be exclusion. As we move forward, who's going to get the chip that's going to enhance their skills and capability? Who's not going to get it? Is that going to be the new divide? Are we going to have a super class of people who, enabled by AI and other capabilities, have chipped themselves, and those who are the lumpen disconnected, who are made and left to do only with their natural capabilities? What are the ethics around this? Is the conversation moving in the right way? And what's our role as a sector in that conversation? Do we leave it to governments and regulators to have? Or knowing what we know and being the people who've had the benefit of being able to use AI and all of these other things, generative and otherwise, do we have a part to play in shaping that conversation? I've spoken already to the fact that we do credit services, so I'm not going to bore you with all of those things. But again, it's financial services on a micro level, to the point where it's a loan to complete a bundle so that you can connect. A loan in some instances, and again, we can debate the soundness of this, a loan to complete so you can buy a meal. So for that colleague who didn't know what to do with their rewards, buy yourself a burger, do any number of things that you can now do, but all of it requires interconnectivity between systems and information, and that's the importance of us continuing to ensure that we work at some point together in order to facilitate not only access, but the acceleration of value delivery for the customer. All sounds very good. One little problem. We have to build networks still. The margins are falling. As you penetrate markets where you haven't been before, what happens? The costs go up, the returns don't go up correspondingly, and shareholders don't particularly enjoy that, so your counters take a battering. Enzo's wealth reduces, and Enzo isn't one for poverty. So, but jokes aside, we have to find a way of addressing this issue of how we address network deployment with declining margins and unhappy shareholders. The cost to carry is increasing, currency risk, we buy all of this equipment in hard currency. What do we do? Here I am still pointing an analog, and I have a fancy laser here. Can you see it? Oh, it's a very shy laser. Customers, on the one hand, want things always on. You need the infrastructure to maintain leadership, not just at a company level, but at a country level. Tourism is a significant driver of value for South Africa and a number of other African countries. Those tourists expect to have the same experiences that they have in their home countries. What do we do to make sure that as a context, beyond our company level issues, that we build a core infrastructure? Is it a carrier of carrier strategy continentally? And what does it mean for our ability to compete with each other? I think what it means is that we can compete on customer obsession, which in the end means our system is better off. Reuse. We've gone through cycles where we've retired equipment that still had useful life. We've been able to grow our rural coverage, for example, by harnessing equipment that we harvest from the more urban areas and redeploying in the rural communities. So, in conclusion, I think the future still holds promise for our sector, perhaps not the same level of return that we've enjoyed, but I think the key is for us to focus on connecting for good, because we know that connections can be for bad. As we sit and talk here today, the next AI tool, which is figuring out how to selectively bomb Europe if there's a disagreement on some stage or other, either has been or is about to be deployed. That's not a healthy use of the technical capabilities that are opening up with the use of micro and nano and other technologies. If we put people first and then deploy the technology to improve lives, I think as a sector, we will always have space, not only in the fintech space, but beyond that. But if we fail to make the unit of analysis and obsession people, we'll get it wrong, and all of us are going to find it to be that we're complicit, and we leave the world ashen rather than a better connected place for our children and their children to thrive in. If we fail to engage the ethical issues that surround the deployment of all of these technologies over which we are custodians and integrators, we will find it to be that the outcomes that we produce are terrible. We have to be mindful of the fact that we have access to people's information at a scary level. What's the responsible use of that information in analytics? Do we use it to manipulate them, make them want things they don't need, Or do we use them to facilitate the sending of flowers so that that anniversary, that birthday, and or what have you is a happy affair? And for some of us who are primarily senders of such, we don't arrive home to unhappy situations because we forgot. And then it's like, okay, how did you forget? You have 10 devices. It's like, well, I don't have AI. Ladies and gentlemen, please allow me to leave it here. Thank you for listening.
Thank you so much, Mohale. Please give it a round of applause.